Let's check in on the price of oil. It's stuck below $75, and that's down from $80 a week ago. Even though equities have rallied, oil hasn't come along for the ride. Our guest says he is bullish on crude, and he expects the next 5 years to bring higher prices. We're joined by John LaForge, head of real asset strategy at Wells Fargo Investment Institute. John, thanks very much for coming on the show.
Good afternoon, Andrew.
Start off by looking at the current price of oil. Why do you think it's under pressure?
A lot of demand softness, and that starts with China. So if you look at the marginal buyers in the world, they tend to be emerging markets. It's not the West. Demand from the West has been pretty flat for years. It's really China. And for the last 18 months, China's been going through a slowdown. It started in the property sector and it's spread. So that's probably the key at this moment. But part of my thesis moving forward, and has been for years, is oil is still structurally undersupplied in the world globally. So yeah, in the last few months, oil hasn't done much, but it will not take much to see 90 again.
It won't take much. Why? Because of this structural shortage of oil, or at least undersupply?
Yeah, a lot of that is driven by this push towards green. So you have a lot of the globe moving towards green. So you have a lot of politics, a lot of policies are telling oil producers globally, from their CapEx perspective, slow down a little bit. We don't need to put 10% year-over-year CapEx numbers out. Let's do 5%. The problem with that is, underneath the surface, there is a persistent demand, particularly from emerging markets. So demand is running 1 to 1.5% per year, and typically supply will match that. But with the push towards green, you have many fossil fuel producers are being too careful in terms of that. So we'll probably go through another 5 years before you can hit that inflection point with a lot of green technologies, where you're going to see oil particularly undersupplied just on the margin. And I think we have a solid 5 years of higher and higher prices out of oil. Sorry to say that for consumers, but yeah, that's probably what we're going to be looking at.
What will happen at the end of those 5 years? Will the relentless rise of EVs and hybrids begin to eat into demand?
That's usually the way it works. Yeah. So oil is, you're in the land of commodities too. High price cures high price. That's kind of the old adage in commodities, and it's quite true on a longer term basis. If you look at when commodity prices tend to peak, it's usually when price gets so high that everyone and their mother goes out looking for the stuff. We're not at that moment right now. We are structurally undersupplied. Give it another 5 years, maybe $150+ oil, and we'll start ramping up again. And then that will run into a lot of these green technologies that are kind of turning the corner, becoming more profitable, and starting to take market share from fossil fuels. And that's probably where the two will meet, and when oil prices will finally come back down.
In the near term, what do you think OPEC will do? Will they be tempted to actually increase production in the latter months of this year?
I don't think so. I think the consensus is yes, they will. I think they will posture that way. But in the end, if what we've seen economically, and this is globally, things are slowing on the margin. This is why the Federal Reserve, as an example, will likely cut rates next month. So we are seeing that slower growth. And what OPEC has proven, particularly in the last 2 years, is that they will play that card. They will play the card of, we would like to produce more oil, put more onto the market, but we're a little afraid of the economy, so we don't want to overwhelm other oil producers or the price of oil, so we're not going to really do this. They've been very good at playing that, and considering we actually are in an economic slowdown, I think they'll play that card. So there is some extra supply there, but I think what's often missed is demand is still pulling. Even though things are weaker economically, you're still looking at 1% demand growth year over year. and we just don't have the supply. The United States is really the only country that is growing its supply to any degree. Most are flat. Canada's up a little bit, but for the most part, things are flat globally, and yet demand is still going up.
Let's switch to gold. You see a decent 5 years ahead for gold.
Yeah. It's commodities generally are in this period I call a super cycle, where they tend to go through these 10-year periods, so they do really well, and then they go too high, too fast, and then they do terrible for 10 years. Well, that terrible 10 years ended right around COVID, around March of 2020. And when that happens, what happens is prices wash out, as we saw. And if you looked at supply growth across the complex, it was very, very low. Gold had one of the lowest supply growth rates it's ever seen. It had gone negative. And yet demand under the surface was still climbing on a per person basis. So I've thought gold for a while could have another super cycle. And I believe it has started again. You never know where the demand comes from. It's often just retail. But this time around, because of the debt situation in the West, you have a lot of emerging market central banks saying, maybe we'll buy a little bit less of this Western debt and replace it with an asset that isn't the liability of a government. So you're starting to see that very, very clearly in the data. Large buying from central banks and emerging markets.
And you said a super cycle. What do you mean by that?
Yeah, it's an odd thing, but each asset class, whether it's stocks, bonds, commodities, they tend to move together over long cycles. That's why you tend to have high correlations with stocks during bull markets, things like that. Commodities do the same thing. And if you looked at since the end of COVID, March 2020, most commodities are up significantly. And that's because the prior 10 years, prices were too high. There was too much production. But by the time we reached COVID, and it really didn't have much to do with COVID, COVID just kind of pulled the layers back so we could see what was happening. There wasn't enough supply growth of commodities in the world, but yet they're still being demanded, particularly by these emerging markets who underconsume commodities versus the West by a dramatic margin. And they're trying to live like the West. So they tend to be pulling higher on commodity demand, yet we're not supplying enough. So these super cycles are all about 10-year periods where demand is still getting pulled higher, but supply growth is moving sideways. We're just not getting the supply. What tends to get the supply, price has to go super high. Then all of a sudden, as I said before, everyone goes out looking for it. They find it, and it sinks price again. But we're probably a solid 5 years away from that.